Let's get started with the video as I'll be sharing the finest approach you can use with the MACD indicator. One of the most basic and often utilized indicators by traders is the Moving Average Convergence Divergence, or MACD. It is essentially an indicator of trend following that plots the correlation between two moving averages. Let's apply it to our chart first. Go to the indicator area, enter MACD, and then choose the option at the top. Now, before we get started, let's understand how the MACD works. As we can see, the MACD is made up of 4 parts. The MACD line and the signal line are the first 2 lines that we have. Observe how the two vary from one another. In contrast to the signal line, which seems smoother because to its delayed reaction to price changes, the MACD line travels quicker and is more sensitive to price fluctuations, which will be the primary emphasis of the MACD indicator. The histogram, which shows the difference between the signal line and the MACD line, comes next. For instance, the histogram will change green if the line passes above the signal line and red if it crosses below. The histogram size is also influenced by the distance between the signal line and the MACD line. As you can see, the histogram becomes larger as the two lines are further apart and shrinks when they move closer together. The zero line, which just depicts the MACD indicator center, is the last line. Traders use this indicator to determine momentum by observing the crossing point between the signal line and the MACD line. To illustrate, consider the following. An upward market momentum is indicated when the MACD line crosses above the signal line. A downward market momentum is indicated when it crosses below. The size of the histogram may also be used by traders to assess the momentum's actual strength. The strength of the rising momentum is shown if the MACD crosses over the signal line as the histogram grows. Likewise, decreasing size of the histogram signifies a weakening of the rising momentum. Since it is previously known that the MACD is based on moving averages, the rationale for using the MACD rather than the moving average now stands. Permit me to provide a little analogy. In addition to the 2 exponential moving averages set to the same values as the MACD 12 and 26, here, the MACD is also configured to its default settings. Observe the relationship between the 2 indicators. Each time the moving averages crossover, the MACD crossover occurs between the zero line and the MACD line. Recall that the crossing between the MACD line and the signal line is what we are looking for in the MACD, not the zero line. I like to use the MACD as my momentum indicator because, as you can see, it provided a significantly earlier entry signal than the moving average crossing. Let's now discuss the many approaches you might use while working with the MACD indicator. First, employing the indication alone is a typical error made by traders. Allow me to explain why relying only on the MACD is not a good idea. The MACD is crossing over to the rising side, despite the fact that the market is generally in a decline. The market is on a downturn, yet the MACD is showing positive momentum. This is an example of how the signals are contradicting each other. This is precisely the reason you should never use the MACD by itself, since it just indicates short-term momentum. Since traders, we must also evaluate the long-term trend, as we should never trade against it. For novices, I suggest a simple but very profitable technique that combines the MACD with a long-term trend indicator, such as the 100 EMA. In this manner, we may trade the MACD with confidence and ensure that we are continuing in the direction of the long-term trend. You trade the strategy in this way. Finding the long-term trend by examining the 100 EMA is the first step. The long-term trend is shown by an upward trend if the price is above the 100 EMA and a downward trend if it is below. Finding crossovers on the MACD that provide the same signal as the long-term trend is the next step after determining which trend to follow. Since the long-term trend in this example is up, we should only act on signals when the MACD crosses over to the upside. This is the time to enter a long position. You may set your profit objective at 1.5 times your stop loss and your stop loss at the closest swing low as part of your exit plan. As you can see, there was a profit on this transaction. Here's another illustration. The price in this chart is below the 100 EMA, suggesting a downward long-term trend. The MACD will then cross below, which will be our entry signal to short. Set your profit objective at 1.5 times your stop loss and position your stop loss above the closest swing high. As you can see, our trade was successful since the price reached our profit objective. That was an easy-to-use MACD approach for newcomers. We will talk about the Advanced Pro MACD strategy in the next video. Watch this video for more strategies in the interim.